Hey, welcome. I'm Lee Boone, founder of Buckeye Financial LLC, former the, and I do stress the Ohio State Buckeyes. I was a defensive back and a member of the 2002 BCS National Championship team. I want to start with a question. How much did you pay in taxes last year? Now, here's a better question. How much of that did you have to pay? Because those are two very different numbers. And the gap between them, the gap is what today is about. What I'm going to show you in the next few minutes are 10 sections of the United States tax code that the wealthy have been using for decades to legally reduce what they owe, grow what they keep, and transfer what they built to the next generation without writing a massive check to the IRS on the way out. These are not loopholes. These are not secrets. They are features written directly into the code by Congress for people who know to ask. Today, you get to ask. Let's go. Here is the uncomfortable truth that nobody talks about at the dinner table. The top 1% of earners in America pay a lower effective tax rate than most middle class families. Not because they cheat, not because they have a room full of lawyers hunting for loopholes, because they were taught early which sections of the tax code were written specifically to reward the strategies they use. The rest of us was taught to file a W-2 and hope for a refund. Think about that for a second. The tax code is not a secret document. It is publicly available, hundreds of pages long, written by Congress, and it is filled with provisions that reward specific financial behaviors: retirement saving, life insurance, real estate investing, business ownership, legacy planning. The wealthy, simply learned which behaviors were being rewarded, and then they built their entire financial lives around those behaviors. A loophole is something you sneak through. A tax code provision is something you were invited to use. The wealthy know the difference. Today, so do you. Most Americans have what I call a reactive tax strategy. The year ends, you gather your documents, you hand them to your accountant files the returns, the bill arrives, you pay it, and here is the painful part. By the time your accountant sees your numbers, the year is already over. The decisions have already been made. The opportunities have already been passed. All your CPA can do at this point is report what happened. They cannot change it. The wealthy operate fundamentally different. They design their entire financial life around the tax code before the year begins. Every investment decision, every business structure, every insurance policy, every retirement contribution, all of it built with the tax code in mind from day one. The difference is not income. It is not a team of expensive lawyers. It is intention. And intention starts with knowing which codes exist. You cannot use a tool you don't know exist. After today, you will know they exist. Before I begin, let me let you get a good scope of these because it doesn't fit on the screen. Okay? We're going to cover 10 sections of the tax code today. And before we dive in, I want you to notice something they all share. Every single one of these codes rewards intentional, structured action with money. IRC 401 and 408. The retirement codes reward people who save intentionally before the year ends. IRC 7702 and 101, the life insurance codes, reward people who protect and grow intentionally with proper structure. IRC 1031 and 1014, the real estate codes, reward people who invest intentionally and plan their exits. IRC 199A and 831B, the business codes, reward people who build intentionally and structure their businesses correctly. IRC 72 and 2503, the legacy codes, reward people who transfer intentionally during their lifetime. The tax codes does not punish success, it rewards intention. Let's look at each one. The first two codes are the ones most people have heard of, but almost nobody fully uses. IRC Section 401 is the foundation of employer-sponsored retirement planning. Your 401k, your 403b, your SEP, IRA, all governed by this code. Contributions go in pre-tax, which means they reduce your taxable income right now. Growth inside the account is completely tax deferred. You don't pay taxes on the gains until you take the money out. Most working Americans have access to some version of a 401 plan. Very few use it as a strategic tool. Most just set it and forget it. IRC Section 408 covers individual retirement accounts, both traditional and Roth. And I want to spend a moment on the Roth specifically because it is one of the most underutilized tools available to middle-class Americans. With a Roth IRA, your contributions go in after tax, but from that point forward, the growth is completely tax-free. And when you take distributions in retirement, they are tax-free. No income tax owed, ever, on any of the growth. The IRS gave you a tax-free bucket. Most people either don't know it exists or don't know they qualify for it. Most people have access to these codes. Almost nobody uses them to their full potential. Now, here is where things get really interesting and where most financial advisors go completely silent. IRC Section 7702 is the section of the United States Tax Code that governs the tax treatment of life insurance. And it is a legal foundation for three of the most powerful tax advantages available to any American. Number one, tax-free growth. Cash value inside a properly structured permanent life insurance policy grows completely tax-deferred. Number two, tax-free access. You can borrow against that cash value without triggering a taxable event. No application, no credit check, no income tax. Number three, tax-free death benefit. The money your family receives passes to them completely income tax free. The wealthy have been using Section 7702 for generations to build what financial insiders call a private banking system. It is the legal foundation for everything I cover in my 16 banks presentation. IRC Section 101 is the companion code. It states simply that death benefits paid from a life insurance policy passes to beneficiaries completely income tax free, whether the benefit is $250,000 or $5 million. Your heirs owe zero income tax on that money. Your 401k will be fully taxed when your heirs inherit it. Your life insurance death benefit will not. That difference can be hundreds of thousands of dollars. Section 7702 is the code the wealthy built their private banking systems on. Most people have never heard of it. Now you have. Let's look at IRC Section 1031. It's the provision that allows real estate investors to sell a property, including all of the capital gains, and roll the entire proceeds into a new property without triggering a tax event at the time of the sale. Think about what that means. You buy a property for $200,000, it grows to $500,000, you sell it, you have $300,000 in capital gains. Under Section 1031, you can roll every dollar of that into a new property and pay zero capital gains at that moment. The tax is deferred indefinitely, and if you keep exchanging, it can be deferred for your entire lifetime. Real estate investors have used this code to build multi-million-dollar portfolios, one exchange at a time, paying capital gains taxes on none of it along the way. IRC Section 1014 is the companion that makes it even more powerful. When appreciated assets are passed to the heirs at death, the cost basis resets to the current market value at the time of transfer. What that means practically is that capital gains accumulated over an entire lifetime, potentially millions of dollars, are eliminated entirely at transfer. Real estate investors do not just use property to build wealth, they use the tax code to keep it. If you are self-employed or own a business, pay very close attention to these two. IRC Section 199A is the qualified business income deduction. If you are a sole proprietor, an LLC owner, an S-Corp owner, or an independent contractor, you may be eligible to deduct up to 20% of your qualified business income directly from your taxable income before calculating what you owe. On a business generating $200,000 in net income, that is a potential $40,000 deduction. Gone before taxes are calculated. This one provision alone saves qualifying business owners tens of thousands of dollars annually, and most of them have never had it properly explained. This applies to independent insurance agents as well. If you are building your own book of business, you need to understand this code. IRC Section 831B is the captive insurance provision. This one is used at a higher income level, but it is worth understanding. Businesses can create their own insurance company to cover risk not covered by commercial policies. Premiums paid to that captive entity are tax deductible to the operating business. The money accumulates inside a tax-advantaged structure that the business owner controls. Business ownership is the single most tax advantaged position available to an American. The code was written that way on purpose. IRC Section 72 governs the tax treatment of annuities. Growth inside an annuity is completely tax deferred until distributions begin. Similar to a retirement account, but Section 72 also contains a provision called the exclusion ratio that most people have never heard of. When you begin taking distributions from an annuity, a calculated portion of each payment is considered a return of your original after-tax contribution, and that portion is received income tax-free. Only the growth portion is taxable. For retirees who need income but want to reduce their tax burden, a properly structured annuity using Section 72 is a critical tool. IRC Section 2503 is the annual gift tax exclusion. This one is simple and powerful. Individuals can gift up to the annual exclusion limit, currently $18,000 per recipient, completely tax-free. No gift tax return required. No estate tax consequences. Wealthy families use this code year after year to systemically transfer substantial wealth to their children and grandchildren during their lifetimes. Fund a child's IUL policy with the annual gift exclusion, and the money grows tax-free inside the policy for the rest of their life. The legacy codes are not about death planning. They are about intentional wealth transfer, starting now. Let me bring this full circle. The retirement codes reward people who save intentionally before the year ends, not after. The life insurance code reward people who protect and grow intentionally with structure and strategy, not just coverage. The real estate codes reward people who invest intentionally, building equity and deferring taxes simultaneously. The business codes reward people who build intentionally, structuring their businesses to minimize exposure from day one. The legacy codes reward people who transfer intentionally, moving wealth strategically during their lifetime, not just at death. Every single one of these codes rewards the same thing: intention and structure and action taken before the opportunity closes. The wealthy are not smarter than you. They were just shown the map earlier. Today, you got the map. Before we wrap up, I want to be very clear about what you just watched and what you did not watch. This is not tax advice. I am not a CPA. I am not your attorney. Everything in this presentation is financial education. And before you implement any of these strategies, you should absolutely work with a qualified tax professional. This is not tax evasion. Every single code we covered today is written directly into the United States tax code by Congress. These are legal provisions that every American has the right to use. This is not only for the wealthy. Most of these codes are available to working professionals, self-employed individuals, and middle-class families right now. Income level does not determine access. Knowledge does. And this is not a product pitch. Nothing I showed you today was a recommendation to buy a specific product. The personalized product recommendations, the ones built around your specific income, your specific goals, and your specific situation, those come in your strategy session. That is where the real work happens. Knowing the code exists is step one. Knowing which codes apply to your situation, that is what the appointment is for. Let me ask you a few quick questions. Are you a W 2 employee paying full income tax every year with no strategy beyond standard withholding? We should talk. Are you self employed or running a business with no intentional tax structure in place? We should talk. Do you have a growing 401k or IRA with no plan for a significant tax bill waiting for you at withdrawal? We should talk. Do you own real estate or plan to invest in it without a clear picture of the tax advantages available? We should talk. Do you want to pass assets to your children without the IRS taking a significant portion? We should talk. And do you feel like you work hard, you earn well, but it never feels like enough after the government takes its share? We definitely should talk. You do not need to be wealthy to use these codes. You need to be intentional. And the first step toward intention is conversation. Let's take a look at this real quick. Thank you. Appreciate your patience. All right. Here's what I need you to understand about how we take what you just learned and turn it into action. Every one of these codes applies differently. Your income structure is different from your neighbors. Your assets are different. Your business situation is different. Your family goals are different. Your timeline is different. There is no universal strategy. There is only your strategy, built around your specific numbers, your specific life, and your specific goals. That is what we build together in your complimentary Buckeye Shield strategy session. Here's how it works. We start with a tax exposure analysis. We map exactly where you are currently overpaying and why. Then we do code alignment. We identify which of these 10 codes apply to your specific situation. Then we build your strategy blueprint, a personalized action plan that positions you to benefit from the codes you qualify for. Most clients leave the first session realizing they have been overpaying for years, not because they did anything wrong, but because nobody showed them what was available. The best time to start designing your taxes was about 10 years ago. The second best time is today. Before you go, I want to point you to two more presentations because tax strategy is powerful on its own, but the wealthy do not use it in isolation. The first is called 16 Banks. It goes deep on IRC Section 7702, the life insurance code we covered today. It shows you exactly how a properly structured permanent life insurance policy becomes a private banking empire. Tax-free growth, tax-free access to capital, tax-free legacy. Scan the QR code on the screen or click the link in the description if you're watching. The second is called Dead Money. It covers velocity banking, a cash flow strategy that eliminates mortgage debt in a fraction of the conventional time and frees up capital to fund the strategies we covered today. If you feel like your money is working, but you never seem to get ahead, watch this one next. 3 presentations. one complete system. Tax strategy tells you where to put the money. Dead money shows you how to free the money. 16 banks show you where to grow it permanently. The wealthy use all three simultaneously. Now you can too. Here's your next step, and it is simple. Schedule your complimentary Buckeye Shield strategy session. Scan the QR code on your screen or go to the link. Oh, the link's not there. My apologies. As I was saying, scan the QR code on your screen or in the description. And this is no pressure. This is not a pitch. It's just a conversation. We look at your income, your tax exposure, your current financial structure, and your goals, and we map out exactly what is possible for you right now. You leave with clarity and a real picture of your options. Whether we work together or not, you leave knowing more than you came in, with no obligation and no surprises. The tax code was written with these strategies in mind. It is time you use them. Quick word on who I am before you go. I'm Lee Boone, former the Ohio State Buckeye defensive back, member of the 2002 BCS National Championship team. I learned on that field what it means to execute under pressure, and what separates the teams that win from the teams that wonder what happened is preparation, precision, and execution. I brought that same mindset into 20 plus years in the insurance and financial planning industry. I founded Buckeye Financial LLC to do one thing: give working professionals, pre-retirees, and business owners access to the same strategies the wealthy have been using for generations. I'm licensed in Virginia, Maryland, North Carolina, South Carolina, Arkansas, Texas, Ohio, and Tennessee. And I will leave you with this: I don't just teach the playbook, I lived it. I will see you in the strategy session.